Maria Schrader, thank you so much. Time now to talk commodities. Let's welcome in Scott Bauer, CEO of Prosper Trading Academy. Got to take a look here at crude oil. Continues to move higher, getting closer and closer to $80 the barrel. Is this the right level? I mean, there's no doubt there's a lot of talk about a lot of demand going forward as we have the world reopening. A lot of high, anticipation. Goldman Sachs with the $90, even OPEC that's upping some production, but still saying that it's not going to meet demand. Your thoughts?
Is it the right level? Nicole, if I had to make an educated guess where we're going to be 6 weeks, 2 months from now, I'd say we're actually going to be lower. And I'm probably in the minority camp on that. But it sure seems to me like there are a lot of speculators in this marketplace driving up the price as well. And it's great that let's call it at the tail end, if you will, of Delta. I mean, I think everybody loves that. There's no question that's a great thing. So the demand out there is off the chart compared to where we've been over the last 18 months. Supply just not there, but I think that's going to catch up really quickly. And I honestly, I don't trust OPEC that they're going to stick to what they just said with the current levels that they're producing. I don't trust that.
And we follow nat gas as well. So as oil is at 7-year highs, nat gas had its highest finish since 2008. We see countries hoarding at this point, right? And the use, right? UK is talking about more use of nat gas. We've seen China hoarding. We've seen Russia saying that they're trying to hold some of their own commodities.
Well, yeah, and Russia seems to be, somewhat of the culprit in this because they're not releasing any to, other parts of Europe. So there's going to be a lot of pressure on Russia, continued pressure to release some of those stockpiles, release some of those supplies. And I know from what I've been, reading and what people are hoping is that the weather continues to be really mild going into the winter months here, which will help some of the fears of just a complete shortage of natural gas in Europe. But these prices,
I mean, nat gas is up 9% today. Isn't that, I mean, and it's not different than some of the other days I see, 5%. I mean, it doesn't normally trade like that.
No, there's a lot of fear out there, and there's also a lot of uncertainty. And the market, in general, regardless if you're looking at commodities, the equity market, the bond market, the market doesn't like uncertainty. The uncertainty right now is, the shortage. So what happens during uncertainty? Volatility picks up. And in the case of commodities, you see, these prices just skyrocketing. But again, similar.
So does that pull back based on the speculators that you were talking about for crude? Is it the same picture?
I believe it is. I think it's more of a probability with crude than it is with natural gas, but I think it's setting up for the same scenario.
Right. Yeah, because as we said, oil highest since in 7 years and nat gas the highest close since 2008. Should we turn your attention to copper before I get to the 10-year bond yield? How about copper? We just finished talking about Freeport-McMoRan, but your thoughts here as we see some of the trends that you're tracking on the charts.
Yeah, as we're seeing some of the explosiveness in other commodity space here, copper's been left behind a little bit here, and maybe for good reason. It had its day, it's down significantly, but you got to watch these levels right around 410, 411 or so. I believe that's massive support here, and I think we could get a real big bounce. There's a lot of headwinds, obviously, for copper. That's why it's gotten hit, but I think it's due for a nice rebound here. I really do.
And we see the 10-year bond yield, right? 1.5 roughly. It's been staying above there, at least in the last few hours. Tell me more about that and why it matters.
Well, it matters most for borrowing rates, short-term borrowing rates, and especially for those high-tech companies, because the tech sector and those companies, they rely on easy borrowing or, borrowing costs for that massive growth, that hyper growth. So as we see bond yields tick up, that's why we're seeing added volatility and higher moves, higher downside moves in the NASDAQ space. In general, what do I think about the 10-year? I think until we get up to 180 or so, this market's going to digest it really well. I think we're going to continue to see volatility like we did yesterday versus today. But until we hit a 180 number or so, that is where I see a real effect to the overall market.
What about when the dollar is moving higher? Aren't commodities supposed to react?
They absolutely are, and we're actually seeing copper move inversely to that, where we should
Right.
see the other commodities doing the same thing, and we're not. And again, Nicole, I think it's because we're in this environment right now of everybody, the retail investor, believing, and maybe it's right, that there's short supply of every
Right.
commodity out there. That demand is just far outweighing what we see in supply. And again, I think across the space here, and I know I'm in the minority camp, I really think across the space here, we're going to see pulling back as regardless of what the dollar does. And I think the dollar is stabilizing here above that 93.5 level. So I think we should all get
Hmm.
used to that for now. But I really see commodities pulling back across the board.
Yeah, all right. Well, then that would make a little more sense if the dollar is moving a little higher and then commodities pull back. That's why I asked the question.
Right.
Very interesting. Very, very interesting, Scott. Thank you. Always love having you on. Thanks, Scott Bauer, CEO, Prosper Trading Academy.